All right, finally taking the time to review the rules for qualified, non-qualified types of trades, the dollar cost averaging, the risk management required by the Apex trading for specifically $250,000 account. I'm pretty certain that you can call it what you want. In reality, it's more like a $10,000 account where the $6,500 drawdown is a circuit breaker. And I would never trade more than maybe 10 lots at any given time. And since we're not allowed to dollar cost average a losing position except for one trade added to a losing position, it's best to not even think about it. It's best to think about strictly adding winning trades, scaling into a winning trade. In other words, if you get a runner, add to it. Otherwise, think about trailing the stops, managing the risk. So I'm sitting here working out my new risk management lot sizing trailing strategy. I've created a number of variants for myself, and NinjaTrader is wonderful that way. So I have a number of different setups here. This one, for instance, goes in with 6 micros, which is 0.6 of a mini. And I know what my risk is. It's about $300 per trade, roughly in that maximum risk. And then when I have my mini, I'm allowing myself about $400 risk per trade. So theoretically speaking, if I had 12 losing trades in a row, I would, or 13 or 14 losing trades in a row, I would blow up the account. Now, normally my win rate is quite a bit higher than 50-50. However, my risk reward is closer to 1-to-1. So when I have my default setup, I typically always have my stop at whatever predefined risk is, and then my first target is at 1-to-1, and then it gets better from there. And then I have my trailing setups and all of that. So I'm using the demo, obviously, to fine-tune my trailing and profit-taking scenarios, and that will help me. I found that this clarification presentation about all the different kinds of styles of trading which are not allowed, not tolerated, like dollar cost averaging, like news trading, like being short in one account and long in another account, hedging, that's really helpful to me because I actually didn't know. I never took the time to get through all of that, and I'm really okay with that. It doesn't matter to me if I'm not allowed to use those kind of trades. That's fine. That works just fine. I don't really have to dollar cost averaging a losing trade. I do have a strategy which does that over a tight predefined range, which allows me to accumulate a position. It's never to save a losing trade. A trade which is failing. I get out. But there is a range of entries which I think are valid, and I do like to accumulate over that range. Now, Apex doesn't allow it, so be it. I'm totally okay with that. Not a problem. Because the truth is, $6,500 circuit breaker is not that much. And even trading maybe 2 or 3 lots in, 2 or 3 lots out, with a $200 stop per lot, that's not all that unreasonable in current markets. It's possible to get on the wrong side of the train, and all of a sudden you're going backwards in a hurry. So I find the rules are quite reasonable, and I'm grateful for all the detailed explanations in the videos which were uploaded in the last couple of days. That's actually been really helpful, and I don't begrudge the fact that I'm not allowed to do a whole bunch of things I normally do. That doesn't matter to me. I can also trade within the rules of the Apex trader requirements, and I'm totally okay with that. I know it can work. I have done it before. It does work quite well. This is now a fairly clean directional bias scalping, basically, trading. Occasionally get a runner, stay with the runner if possible. okay with $200 to $300 days. That's sensible trading to me. That's setting realistic goals. That's managing the risk. That's being mindful of the drawdowns. And I really do like Rithmic's risk management system. I think it's fantastic. And it really helps to keep the whole thing in the green. Now I trade both ES and MES. Sometimes I would go in with 6 micros and then peel them out as the profit is valid enough to start taking profits. Other times I'll go in with 1 mini or 2 minis or 3 minis. So in effect, it doesn't really matter. I can go, theoretically, I could go in with 25 if I wanted to, but of course that would almost immediately blow the account if the price spikes against me by even a buck or two. So I don't do it. However, with the micros, I do like going in with 0.6 of a lot or 0.8 of a lot and peeling it off. So it's all in. For me, it's all in, and take profit on the way when you are in the green. That's the strategy. And I will tighten the stops manually, plus my strategy will trail the stops. So that's pretty much the first part of understanding APAC's rules and regulations, and the process of working out the kind of risk management which is consistent with my long-term pattern of trading, which I do know because I've had years of this trading essentially the same system. And this is strictly day trading. This is very different from long-term pattern trades, are completely different. But since we're not allowed to take those, I'm good with that. It's all good.